Hello traders, Gary Wagner here. It is 12:10 in Honolulu, 5:10 in New York on Friday, 13th day of December 2024, and this is the evening report for gold and silver, our weekend review. After hitting a intraday high right below 2760 on Wednesday of this week, we had an equal opening price on Thursday. However, gold began to sell off, completely engulfing the prior candle, creating a simple two-day candlestick pattern called an engulfing bearish. Today was characterized by even lower prices, with February gold giving up about $38. That is a net decline of 1.38% with dollar neutrality, taking a troy ounce of February gold to 2667.90. That's this low we see here. This is what we would call the confirming candle for an engulfing bearish. And in terms of where we could see gold go, should it continue to trade lower, we want to look at key and critical areas that have provided either support or resistance. 2640 is the first area that I would look at should gold continue to drop, and that's not a guarantee, but that's because we had some wicks come in here, we had lows come in here, but for the most part we had all of our bodies above, call it 2656. A hard break below this price point, and we would have to look at anywhere between 2600 and 2640. However, I am not convinced as of yet that we will see the same kind of action that we saw back in October, when an engulfing bearish formed with gold at the all-time record high above 2800 and the subsequent correction moving to 2566. We also saw an engulfing bearish occur on Friday, the 22nd of November, with this large dramatic decline. However, as you can see, that began a series of sideways and range-bound candles that led up to a small rally and then the engulfing bearish that we identified today with confirmation. One of the models that we have been working with and the subsequent conclusion of a full motive phase, waves 1 through 5, as well as the potential that we are getting near the conclusion of our corrective phase with a compression triangle of sorts, is what leads me to believe that we could see the sell-off that occurred over the last 2 days being brutal but quick and finding support early next week. The reason I say that is when we look at the series of lows that came in, this one on Thursday, November the 14th at 2568, the next low at 2640, that came in on Friday the 6th, and this most recent low at 2664, we have seen gold trade to a series of higher lows, although we have not had lower highs completely. We had a couple of them, but this last upside move, what we're labeling as a D wave, definitely was above the B wave on this compression pattern. What is most important is that we did go long this week, playing on this upside surge that we saw at the beginning of the week. We did move our stops up to be able to book profits on the trade, and we'll go into the weekend flat with no active trades in gold.
Last week we discussed how silver could find higher pricing this week as it was still within its B wave, and we saw that on Monday, Tuesday, and Wednesday, and then on Thursday we had a massive decline, over 3%, followed by another hefty decline today. This puts silver in the same boat as gold, with a engulfing bearish occurring yesterday and our confirmation today. That candlestick pattern matches up with what we are seeing in our Elliott wave count, which is we have entered our C wave and we should expect lower prices next week, just as our candlestick pattern suggests as well. Another bearish chart pattern, a head and shoulders pattern, where this is the first shoulder, this is the head, and this is the second shoulder. That means that pricing could fall to the beginning of the first shoulder, which would take us all the way down to $28.75, which would make our C wave approximately equivalent to our A wave, which is what we look for in a standard zigzag formation. So we are looking for lower pricing next week, and since this A wave was not super steep, this C wave may be steeper than the A wave, and we might get a sharp sell-off continuing next week, taking silver ultimately to below $29 per ounce.
This has been Gary Wagner
And Joseph Wagner.
wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.